Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I wanted to just give a brief update on crude oil. I want to make this short but relevant. So let's get into it. Okay. So this is the weekly chart of crude oil. So each one of these bars, which are candlesticks, Japanese candlesticks, represents a week of trading action. So this goes back to 2021, and we can see in early 2022, we started this consolidation after a huge up move in crude oil. And so as this is wound tighter, you're getting more and more volatility, more volume. And we went to a buy rating on uh, March 8th at 67.08. Today we closed at 69.65. And so this is just noise. We really need to get up above 76 to really see a breakout of this big 2.5 year consolidation. And at that point, we'd have a price projection of 142, which would be huge. So the potential is very big, and I think the risk is uh, small because our stop is at 65. So um, that's where we're at on a big picture basis. This is the daily chart. So what I wanted to show is that if you followed me, you know about my bullish divergent, my bullish uh, rainbow convergences and my bearish rainbow convergences. And so here we have a potential bullish rainbow convergence that could be forming in the next day or two. So what happens is this confluence of moving averages, when they come together and their lines touch, two things can happen in a bullish rainbow convergence. One is prices can stop going up and sit there until the moving averages come up to that, and then we get a test of whether it's going to hold or not. Or a type 2 convergence, which I see most of the time, is that prices come back to the convergence. In this case, about 70. Um, and In a bullish convergence, if it can hold, it promises a new high. So the strategy here is to let this go another day or two. I wouldn't be surprised if we get up to our 250-day moving average at about 73 in the next couple of days. And then we have this convergence. I'll be selling a good amount. I don't know, maybe half. It depends on your risk tolerance, what your objectives are. But then if we got a pullback and prices were able to hold at the 70 level, I'd be buying even more. I'd be buying double what I sold to increase my weighting because we're still expecting eventually this to happen, which would be very, very large. So that's kind of the strategy here, and I wanted to share that with you. I did get an update from Tom McClellan, the McClellan newsletter. Him and his father, Sherman McClellan, has been doing technical analysis back in the 70s. I just want to give a shout out to them. I'm using their sentiment information. And so this is the commercial. So the commodity, the COT report, it's basically the futures markets. And there's three groups: the commercials, the trend followers, and the small traders. And this is the commercials, the big boys. So these are the people in the industry. This is the Chevrons, the Shell Oils, banks, big money. And usually they eventually are going to be right. And right now you can see that their positioning is they're at they're never net long because they have billions and billions of dollars of oil and they use the futures markets to hedge. But when they're down to these small hedges, you know that they're bullish on oil prices. So this is a very bullish sign, and I want to share that with you. And I just wanted to look at seasonality real briefly. So here we are. We're in the throes of seasonality into late June. And so, it's again, this is just a tendency. It can be wrong. We've certainly seen it being wrong in the equity markets, the S&P, et cetera. But all these things are kind of pointing in a good direction for crude oil. And when I went long, it was very out of favor suggestion. So let's see where we go from here. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Tell your friends and neighbors, your grandmothers, your children, and good trading to you tomorrow. Thank you and have a great evening.